what's going on, everybody? Welcome to another episode of the Rapid Review. As we do every single week, we are here to look at what went on in the overall market, all the information, data that we have, not to predict what's going to happen, but to understand what's normal and expected action within the market and point out if there is at any point that we need to change how we're putting different exposure and different risk into the market. So without further ado, let's get it started. All right. And as always, we're live on YouTube, live on Twitter or X. So if you have any questions, comments, agree, disagree, feel free to throw that information in either of the chats. And if you're catching this a little later, you can always rewind and go back just to basically look at different parts. It's going to be saved on both channels. All right, getting started, market direction, uptrend, and a power trend. So both remain intact. No issues there. When we go over to the general indexes, you'll kind of see exactly what I'm talking about. But in terms of distribution days, we got 2 distribution days on the S&P, and 3 distribution days on the NASDAQ. So looking at our distribution day tracker, you can see the days that we currently hold. The big changes this week, where you can see that on Tuesday, we gained a stalling day both on the S&P and on the NASDAQ over here. Did I miss that one? Sorry, on the 15th, here and here, mixing up my days. But stalling day on the 15th, here and here, which was this past Tuesday. And I also realize that... Sorry, this count is just a little messed up too. So I'll put out an updated tracker on this. That's my apologies for this. I was doing this a little late last night, but yep, this is just slightly off in the day count over here. Should be 3. We should have Thursday and Tuesday, Wednesday, Thursday. This is correct. This one's just slightly off over here. And then in terms of days that we lost, the S&P actually lost 2 days. So we lost the June 9th and the June 11th days due to stalling, both stalling days. Sorry, mixing myself up here. The S&P lost 2 days, the June 9th and the June 11th day, which are distribution days that we lost due to time. Jumping over to just the overall indexes this week, the S&P was up 0.59%, NASDAQ is up 1.51%, and the Dow down 0.07%. So NASDAQ clear leader this week. When we start looking at some of the industry group trends a little bit later, you'll see how a lot of the growth stocks and stocks that tend to fall into the NASDAQ are kind of leading out, and you can see that way for the year too. NASDAQ leading out the year up 8.21%, S&P second up 7.06%, and the Dow, the laggard for the year, up 4.23%. So, and this is very, very common. A lot of times the NASDAQ's going to be a little bit more volatile than the S&P, than the Dow. So nothing really too interesting here, but just something to note. Moving averages, S&P and NASDAQ sitting healthy above all moving averages in the proper order. We're talking about this kind of every single week. And the big thing, and we'll see when we look over the charts, is the amount of resilience that we've had around the 10-day. This is something that for most of our trading styles, especially the CANSLIM traders, to go trading up and down and below this 10-day simple moving average isn't really too concerning. A lot of us focus more on the 21 and then maybe even the 50, depending on how long-term you tend to trade. But we've been just resiliently bouncing and staying above this 10-day simple moving average for the majority of this uptrend. So very, very interesting to see how powerful this is. This is where you're getting a lot of people talking about how extended this market is, and I'll get into that in a little bit. But yep, all looking good here. Dow dipped below the 10-day, which really isn't much of a concern, sitting healthy above all moving averages. And then you have the Russell down here. Not something I focus too much on, but definitely something to just kind of take into account as a secondary indicator. And you can see it's just, kind of lagging behind the others. The 200 is still above the 50, but if this market continues up and we see that widespread move, we'll see that this should also order itself properly. All right, so let's jump over to the index charts. All right, we'll take a look first, as we always do. As you can see, I'm not using the paid version of this. We'll take a look at the NASDAQ on the daily. So we'll zoom in a little bit. You can see we were up every single day this week on the NASDAQ. So very interesting. And you can also see that the volume kind of climbed up and then teetered off on Friday, which nothing too concerning there, but just interesting to see the volume increasing throughout the week as we climbed higher. You could see that this was our Tuesday stalling day. And the reason this was a stalling day, we had that big gap up, felt like a really, really powerful day in the morning. And then we completely reversed. A lot of stocks kind of that broke out, kind of reversed down and closed lower for the day. Um, and we barely inched out a 0.18% gain for the day. So a lot of times when you see this, especially the textbook definition, as you're starting to get towards those all-time highs or breaking out towards all-time highs, to see that kind of happen normally shows some institutional selling coming into the market. But as we could see, the market kind of shook that off. It really wasn't too alarming as we climbed up higher and retook those highs of that day throughout the rest of the week. What was interesting, though, we had talked about last week that in this range that we are trading so tightly, so tightly for these couple of days, it was very interesting to see which way we were going to break. Were we going to break higher or were we going to break lower? And then from there, what did we do? So the reversal here honestly wasn't too concerning. It's almost like we broke out and some of those people that were holding on, the weaker hands, maybe just kind of sold off, and we saw that drop down. The volume was higher than the prior day, but we could see then the volume kind of picked up through later on in the week and really showed that this was not too concerning of a day. So needless to say, we're still going to keep track of that day as a distribution day, but just something to take note of, and not just had the actual stalling day, but how we reacted after that. We would have probably have thought that we would have followed up with down days coming through here. And really, what I think a lot of people were looking for was us pulling into the 21. And this day in particular, if you went on social media, a lot of people were saying, all right, we're about to get this, at least short term correction. And a lot of people were saying, this is it. This, uptrend's kind of going to be over. And we know this has been unreasonable and how fast and how high we've been going up, and this is it. Now we're going to see the other direction. So a lot of predictions, not really anything other than emotional of seeing that gap up and the rapid gap down. And it was also tied to some news related stuff with Trump and people in his, I think it was people in his cabinet. I'll be honest, I don't pay much attention to the news because it doesn't really help you with your trading, as you can see. So yeah, that is kind of what you saw happen right there. We'll take a look at the weekly. I mean, pretty clear. We're just trending upwards beautifully. We closed near the highs for this week. We broke out of this kind of tight range here that we had for 2 weeks. We were really kind of trading tightly like we just talked about. And the volume is just slightly down from last week, but overall positive. Talking about the key levels. So on the upside, really at this point, it's just looking at all-time highs. Can we continue to make all-time highs? And at the same time, can we continue to make higher lows? As we do have, whether it's small little pullbacks or we have, more real pullbacks towards the 21, can we just continue to make those lows continue to grow higher and higher and higher as we just stair step up? On the downside, though, the main level that we're really looking at right now is that 21 day. Really keeping an eye. Not necessarily that if we hit it or even break below it for a day is that alarming, but just understanding that could be normal action, especially with how much we've trended up. A pull into the 21 day, a break for a day or two, even below that, and then a bounce back. Completely normal action. Wouldn't really concern me that much. That is really where I keep a huge eye on, is down here. Also keeping an eye on that prior high, the 12/16/2024. That was the prior high within the market. We were saying that this is a place that we want to really break out and continue to make new highs, same way we would with a stock chart. And we have, and we've held above that level, which is another thing. Once you break above it, just like a stock, can we hold above that breakout level? And we have so far. And now starting to see that 21 climb up higher and give us another level above that. makes it even more important that if we do break below, to really stay above that level as well. So two key levels to watch. Look in the longer term trend, especially if you're a bigger, longer term position trader. It's the 50-day simple moving average. Keep it on that. But other than that, on the downside, those are the levels I would watch. And like I said, it's just see how we react at those levels. Not necessarily saying that if we come into those levels that you should be saying this is the end. See what we do. The S&P, though, we'll jump there quickly. Not really much more else to say about this. It was very much the same action that we really saw on the NASDAQ. The only difference really is this day right here, Wednesday, where we kind of broke lower and then closed higher. Was a lot tighter around the 10-day, and we actually got a little closer to that 21. But nothing other than just a slight difference in terms of how we interacted with these moving averages. I don't think anything different is going on with this trend personally, that it is another signal to me that something's wrong. Ironically, everything is telling me that this market is extremely resilient. There's a lot of buying coming into this market, and things are looking positive. All right, so let's jump over to Deepvue, and let's look at the theme tracker. So for those of you who don't know, I am a Deepvue partner. This is the tool that I use for pretty much all of my stock screening, watch list, alerts, and where I get a lot of my stock ideas from. Really, really great tool. They are extremely innovative and making sure that this tool has everything that any trader could possibly need, because they themselves, the four co-founders, who are also the founders of TraderLine, are using this. So really, really happy with this tool. They kind of put a pause on some of the new updates that are coming out just to make sure that this is a really, really bulletproof platform and everything is running quickly and efficiently. So, but right now, there is a lot of great, great stuff in here already, and I'm really, really excited to see what they bring in the future. And this is one of the things that I really like, is this theme tracker. It's just a quick visual way to see what is going on in the overall market in terms of trends. So on the left-hand side, we got the 1 week. Good to see, like I said, the growth stocks. We saw more broad-based breakouts and broad-based strength in the growth stocks that we tend to trade, as most of us being growth stock position traders, swing traders, things like that. The Chinese stocks definitely saw a big jump in that as well. And then a lot of these other industries, we've been seeing, some strength, especially within the blockchain area, semiconductors, been seeing strength in those areas. But the leaders for this week really were the growth stocks and the Chinese internet stocks that were leading out. So, and just so you know, in the future, these will be clickable. So you can click and actually see the stocks that make up these groups. Right now, it's just proprietary information that they've kind of developed themselves based on some different research that they've done. On the 1 month, though, this is the real big important one for me, because, you can have one strong week. That doesn't necessarily mean it's going to be a longer term trend that's tradable. But that 1 month trend, when I start seeing things coming up in this 1 month area, this is a little bit more of a sustained uptrend. And this is more where I want to start playing around in terms of positions that I'm doing. So blockchain, definitely big. Solar, yes, solar. If we looked at some of the ETFs, and I can actually bring those up over here. We looked at, let's say, TAN. And let's look at that on the weekly. And then we could also look at rays. It has been an uptrend for weeks now, right? It's starting to get above all those moving averages. The moving averages are starting to work in the right direction. But it is definitely a kind of recovering industry. So just keep in mind, even though the solar has been performing well, you want to make sure that those stocks, based on the way most of us are going to be trading, you want to make sure those stocks are in sustained uptrends. You want to be aware of the possibility of a lot of overhead supply in some of these position or setups. But solar really showing strength. Airline showing strength. Banking, semiconductors, growth stocks. You'll see, and like I said, these Chinese internet stocks look like they're starting to maybe climb up the rankings too. And then year to date, this is a little bit longer term there, obviously. Miners still winning out, but blockchain clearly one of the leaders for the year. And you can see even semiconductors, Chinese internet, all those kind of populating up in here. So good to just get a general idea of what's going on underneath the market, where so you're seeing some of these industry trends and where you could be looking for stock ideas, because if they are leading the market, it is the pools of stocks that we really want to participate in. So this is definitely good to give you a good overview as to what's going on. All right. Now, let's just talk exposure levels. Look, exposure levels really aren't changing. I've kind of talked about this over the last couple of weeks. If you're fully invested and you're in the right companies, the right leaders, the stocks that are working well, then you're probably doing something right. Your portfolio is probably sitting nice and pretty, and you made some pretty good gains outperforming the market. So, yeah, no reason you shouldn't be 100% invested if you made moves into stocks at the right times and we're looking at the right type of companies. Those on margin. If it's part of your game and you know have a plan on how to use it, then I don't see a reason you can't be on margin. That said, with how extended we are in the market, it might be a good situation to limit some of the exposure. If you were heavily on margin, you've made a ton of profits. And again, everybody's strategy is different. The way I would look at it is I've kind of utilized that margin. I've made a ton of profits. I'm heavily exposed or due for a pullback. Now might be a good time to at least limit some of that exposure so I can keep that equity curve up. That if we do have a severe pullback to the 21, which really wouldn't be severe, but if we had a pullback to the 21, it wouldn't cause me to see a huge drop in my portfolio, just kind of locking in those profits on the way up. Other than that, look, we've talked a lot about how this market has been choppy. This market has been difficult for breakout stocks. This week definitely felt different. It felt like the breakouts were much more broad-based. A lot of the breakouts were following through, but it was just a more broad-based move by the market. And I know a lot of people are saying that that could mean, all right, well, this is it. It's kind of over. Once it starts getting this easy, it's, just be prepared because it could go the other direction. That can be true. But at the same time, once we see that broad-based move, that also makes me more confident. It's not just a few select companies or industries that are doing well. When we start to see that broad-based market move, those are normally those really strong uptrends that I want to participate in. And it hasn't been like that in general. So the fact that it's really starting to look like that right now could mean we are in for a little bit more of a sustained uptrend. The big thing, though, is you don't want to get risk averse. You don't want to drop discipline because it could get a lot easier. And when it gets a lot easier, some people will sit there and think they're a genius and start to just trade haphazardly because everything's working. Your Aunt Sally's buying stocks and she thinks she's a genius. It's important to still maintain that discipline. Utilize the uptrend, may have the benefits from it, but just be prepared because at some point it's going to end. If you're lacking the discipline and you're not following your strategy, that's where you're going to get hurt, and that's where you're going to see that you're going to underperform. But if you can just ride that trend, the strong trend, have a lot of your stocks working very well, be in the leaders, that's where it is likely that you are going to outperform the market and then hopefully be able to retain most of that equity curve as you're climbing your portfolio higher and higher. So just keep that in mind. But yeah, overall, this market's strong. Things are acting perfectly. Again, we're due for a pullback. And this is one of the other things that I really wanted to kind of finish off on. I talked about in the beginning when we had that stalling day and just that rough kind of start to middle of the week within the market. There was a lot of talk. Kind of many people making predictions of this is it, and start selling your stocks because we're going to roll over from here. When you look at what the chart was doing, we were still sitting above the 10-day simple moving average. We hadn't had any really poor downward move. It was just one maybe day, not even a full day of some rough action, and that's emotional. That is when you start looking at your equity curve just take a quick turn, or a stock that you had just bought completely fail. whatever it is, a lot of people getting emotional as what's going on. But when you take a step back and you look at the overall market and you look at a lot of these stocks and the trends that are going on, it's just nothing alarming. That is, I think, where you need to learn to separate um, from the overall trend versus what's happening intraday, and not getting that to get you caught up in your emotions and start saying, this is it, I need to run for the hills, and start predicting what's going on in the market. The reason we look at all of this stuff is not to try to predict. It is just to simply to get an understanding of what's going on in the market, see all the underlying pieces, know what is normal market action, what is healthy market action for that uptrend, know the normal outcomes on the up and the downside, and then know where would be something that is, let's say, I won't say in a way abnormal for the uptrend. And if that does occur, then start knowing this is the signal that's telling me something is up. I need to start reducing my exposure. That is what the purpose of this. It's not to predict. It's to kind of give us some areas to keep an eye on both directions. Sit back and let the market tell us what happens. And then when we're bouncing around kind of between the highs and the lows of certain areas that are signaling us to do different things, we're not getting emotional. We're not hurrying and making tons of different decisions. We're just sitting back and waiting and letting the trend play itself out, riding that wave until we are told otherwise. That's, I think, the best way to really look at it. And this week was a prime example because you had talked to a lot of people Tuesday, early Wednesday. There was a lot of people that were doom and gloom. And now you fast forward to the end of the week and everybody is the complete and utter opposite. And it was just because of some small emotional moves intraday that caused a lot of this talk and a lot of these things going on. Again, we know we're very, very extended. This is starting to get a broad-based move. We are due for a pullback, but the market does not care. The market is going to do what it's going to do regardless. And even though the probability may be higher of a pullback, or the probability may be higher of whatever event, that does not mean that event is going to happen. At the end of the day, these instances, if you are somebody who has read Mark Douglas's book, a lot of these instances, buying a stock, what's going to happen the next day within the market, is really a coin toss. But we're just using all of these things as probabilities to give us an edge that over time will keep us in the right position. And that's the way I like to look at it. No, I'm going on and on a little bit. Hopefully this is helpful for some people. But yeah, that is really kind of all I have. That's like my last thoughts for this week and this market. So yeah, there you got it. If you're watching on X, there's the YouTube channel. You can rewatch it there. If you're watching on YouTube, there's the X. You can follow me there and also watch on there. Discord, link in the description. I also have the link floating around on my X. And we are at 999 members. We are one person away from hitting 1,000, which is crazy because the Discord channel is just growing so rapidly this year. So super, super stoked to just see the amount of people in there, the amount of quality people from professional traders, new traders, people sharing thoughts, and everybody being really accepting to everybody's opinions and thoughts, while also still keeping things really, really focused on trading disciplined and trading within these growth stock strategies, whether it be CANSLIM, CPO, or things like that. So yeah, other than that, that is